What's up, guys? We're here at Bitcoin Asia 2025 Hong Kong. A lot of big speakers are gathered here to talk about the future of the crypto industry. Very, very exciting. We have CZ, Yatsu, and the Sandbox organization. And we have Eric Trump, which is a big deal because Trump administration has been buying a lot of crypto. If you're holding some sort of altcoins, you need to pay attention to this video because who knows, what if Eric Trump is actually going to say they're gonna buy even more altcoins? That's gonna be exciting, right? So stick around, we're gonna be venturing around Bitcoin Asia and see if we get any good interviews going. We are here with
Justin J. Das from Cryptonite Capital.
Justin. You've been big on fundamental analysis. You mainly focus on the macro. Now, this year, there's really big talks about Bitcoin, Ethereum Treasury, and even very recently, there was the Solana digital asset treasury plan, right? So,
Big front run.
Yeah, what do you think about those?
No, I think it's interesting. There are many ways to look at it. I think two key ways I like to look at it is, first of all, for traditional investors to use these DATs as a proxy for these main assets. So there can be various reasons. Either, let's say you're an investor that's based in some jurisdiction that doesn't have that much access to US equities. So let's say you can't buy the Bitcoin ETF directly from all these broker dealers. The local dealers in your jurisdiction are not offering it as well. So you go to another marketplace, which will maybe be the Hang Seng Stock Exchange, for example. Since we're in Hong Kong, this is more relevant. And then that's how you get a proxy exposure to these types of assets. So whether that's going to be Ethereum, Bitcoin, or Solana. The second way to look at it is more of a controversial view. So now that we're in Hong Kong, and then it's been a very big tech hub for a while. So, pre-IPO shutdown in 2019, there used to be a lot of foreign direct investments for Hong Kong startups. So that has completely dried out over the last 5 years. So what does it mean? So it means, if you look at Chinese macro, consumption has completely gone down. So a lot of these startups that got listed in the Hong Kong Stock Exchange or NASDAQ, whatever, they're not as profitable as they used to be. They're not generating as much revenue, and you can see their stock price really just tanking. So they have to do something about it before they get delisted. So one way to kind of reinvigorate enthusiasm around their stock price is to build a digital asset treasury strategy around it. So you can see these two agendas kind of combined together in the middle, where they have a new narrative where they can be the new proxy for these sought after assets, and it also rejuvenates foreign investors for their own stock who can participate, trade them, get more volumes in, and potentially hold them long term. That's why they want to be accumulating these treasury assets. So that's kind of how I'm viewing this DAT out of Hong Kong, at least. But the fundamentals applies to every market.
So basically, it's sort of, would you say, giving VCs an exit plan at a premium price?
Well, that'd be a good story, but I would say no. I would say no, mainly because when you look at these tokens, Solana has been completely, vested out for the longest time ever. I think within 2 years after launch, all investors were completely vested out. Okay. Same thing for Bitcoin, Ethereum. These are all completely decentralized assets. So I wouldn't really say VCs have an edge here, unless you're looking at the long tail of asset listings. So let's say if it were to be a really sought after Hong Kong-based crypto unicorn that has a team that's looking to advocate and build a treasury strategy around their own asset with these other listed companies, then that could be an interesting avenue for VCs to exit from their current holdings.
Okay.
So the logic is there, I would say.
What about AI? What do you think about the prospects of AI, especially this year? Every time they launch, every time they have a new patch update, the value of human jobs are decreasing more and more.
Yeah, this is very interesting always. So I think even Wall Street has the same agenda, or they have the same view, which is we've kind of reached this point of really high efficiency where, there are a bunch of correlations, but the caveat is efficiency has gone up really, really high. And for the first time in a long time, at least the last 50 years, we're seeing a very big divergence in S&P asset prices and jobs data. So unemployment. So unemployment is really, really like high right now. Like in the US, it's nearing 3.8 or something, or 2.8. Yeah, that's the right number. But S&P is closing highs. So normally these two trade together. Normally these two trend together. But for the first time in last 50 years, these have completely diverged. So what does it mean? So the takeaway is really companies.
When did it start? When did the divergence start?
So within this year, just this year. So S&P is hitting all-time highs, and unemployment is really, really bad. So we've never seen this in the last 3 or 4 cycles. Even when the tech bubble happened, or the tech boom happened in 1990s, we didn't see this kind of really, really interesting correlation between the job market and AI. So basically, productivity is really, really high. That's what I'm getting at. So, we expect this to increase. Agentic AI to further, do more and more complex transactions, do more complex performance for human needs, and then, for example, in the past, I used to need 2 to 3 analysts. Like, let's say 4 years ago, before ChatGPT, I need 3 to 4 analysts to, do market surveys, market research, provide me all this data on a day-to-day basis, so we can make decisions based on market movements. But now I can basically do it all myself. So that's productivity, very high productivity. Yeah.
I feel like one day maybe even you won't be needed. That's actually very scary.
Yeah, you know what are the odds, right? Yeah, I could be replaced. You don't know. And so the game really becomes, really understanding the trajectory of what big impacts AI can make as a low-hanging fruit, right? Understanding where all these developments are, understanding your unique positioning, what value you provide to the market or to your job or to your industry, and really finding ways to add value more than ever. You need to deliver value, otherwise you're redundant.
You're talking to the everyday people?
That's right.
Oh, okay.
Not you. We know you're productive.
Pleasure talking to you, Justin.
Yeah, all good, man. Always a pleasure. Yeah.
All right. Share your X handle if you want to.
Yeah. X handle is Justin Bustin. I think Ron can tag that right at the bottom. I post mainly crypto macro. Once in a while, some League of Legends content. Let's see.
There you have it. Let's go. Hey guys, we're with Sebastian Borget, the co-founder of the Sandbox. And I really gotta say, I'm actually a big fan of the Sandbox Alpha. In the next 5 to 10 years, where do you see the whole crypto industry heading towards in terms of direction? Because now we're seeing more talks about Bitcoin and Ethereum treasury companies. And very recently, Solana also introduced a DAT plan, the digital asset treasury plan. Do you foresee more of these? And what's your whole take on the whole institutional adoption of crypto now?
So, well, I've been a pioneer in blockchain gaming. It's been already almost 6 years that I'm in the space.
Actually, 2012.
2012 was mobile, but a pioneer in mobile gaming, and 2017 blockchain gaming. So, always at the edge of the new technology and inspired by what it can bring. I love to see, again, different realm of adoption for crypto and recently stablecoin and like you described, all the digital asset treasury has been capturing more of the institutional money and attention, which is not necessarily a bad thing considering US was for a long time a closed market due to SEC and regulation, and now it's reopening and probably will lead the world to follow and adapt again. We know that, and we've seen before that usually a culture follows money.
Yeah.
And people need to actually make some financial success, purely financial, before they can re-inject a portion of those earnings into other fields such as art, entertainment, gaming.
Yeah.
And quite logically, given the economical status of the world, rise of inflation, war on Ukraine, and so on, people need to make some earning just from the pure financial state before they start spending again on leisure, on entertainment, in NFT, in culture. And so games, in the meantime, they've been building. They are looking, the digital asset treasury, they've been more strategy for the chains and the protocol than games, but why not? I'm pretty sure we'll see the digital asset treasury for metaverse, for gaming soon coming out. And they could be just a great instrument to help support that growth that's needed for like any project to succeed. We'll know from the beginning, success comes from the right timing, the right product, and as well like right go-to-market and financial support behind.
So you think money comes first, then the culture?
That's always been the model. Like entrepreneurs raise funds from VCs or angels to build a product, or they've been raising funds from the community in the form of like NFT sales or token sale. They build a product, launch a product, and keep like if they are successful with it, they keep like by becoming a profitable business, earning more revenue that they are spending, or adjusting along the way.
I see. So now I think we're more in the phase of investment money first with all these treasury companies, then culture comes after?
Well, I would say we're in a phase where like a lot of founders and games have been raising funds via token or VCs and crypto investors in the 2021-2023. Some of those games, unfortunately, like a developer didn't deliver, the project failed, some of them have shut down. We know like 2024-25 have been a year where a lot of Web3 projects didn't continue, unfortunately, and ceased. But at the same time, some others have really grown and emerged and leveraged and delivered well. So it's not a surprise. Any industry, the success rate in entrepreneurship or in gaming is probably 1 or 2% of companies will make it at the end. Among any game that's being made, only 80% of them will actually launch, because if not, they will not reach the success metric in soft launch and so on. And out of those 20% that will still be launched, only 30% of them will be still live after 4 years. So there is a real challenge, a real competition. AI is not making anything easier. We know that's reshuffling the card. But with every challenge, there's always opportunities behind.
All right, so great to talk to you, Sebastian. Really looking forward to the Sandbox.
See you in the next season. And definitely follow Sandbox and Sand for like any major announcement and everything upcoming.
Okay, thank you, Sebastian.
Thank you.
Hey guys, thank you so much for watching this video. My name is Martin. I was the guy behind the scenes for all of these interviews. If you want to watch more, click over here in one of these videos. We have part 1 of the Bitcoin Asia event. It was truly an eye-opening one, so let us know down below what your favorite part was and what you guys want to see next in the comment section down below. But I hope you have a great rest of your day. We will see you guys in the next one. Peace.